If you own a home care agency, have you ever used your business credit card to pay a personal expense? Maybe you paid your personal electric bill. Maybe you bought something for your family. Or maybe you simply used the wrong card. Here is what I want you to understand. Paying a personal expense from your business account does not turn that expense into a business deduction. And the opposite is also true. If you personally pay a legitimate business expense using your personal credit card, doesn't automatically make that expense personal. So what actually determines whether an expense belongs to your business? That's what we're talking about today. I'm an enrolled agent with over 14 years of experience helping business owners navigate taxes, accounting, and IRS rules. And this is part of our series about protecting your home care agency from costly tax mistakes. So let's start with the most important point. What actually makes an expense deductible? It's not the bank account and it's not the credit card. It's the nature and business purpose of the expense. Generally, a deductible business expense needs to be ordinary and necessary for your business. Personal, living, and family expenses generally aren't business deductions. Let's say Jane owns a home care agency. She uses the agency's credit card to pay her personal electric bill. Does paying it with a business credit card make it a business expense? No, it's still personal. Now, imagine Jane uses the same business credit card to pay for the scheduling software her agency uses to manage caregivers. So instead of asking, which card did I use? Ask, what was the expense and why does it belong to my business? That's the distinction I want you to remember. But what if you've already mixed the two? Let's say Jane accidentally pays her $100 bill, personal electric bill, using the agency credit card. That transaction now enters her accounting records. What should she do? She shouldn't categorize it as a business utility expense simply because the business paid for it. It's still personal. How that transaction should be recorded can depend on the business structure and circumstances. A sole proprietor, partnership, and S corporation don't necessarily handle owner transactions the same way. So I'm not going to give every business owner one accounting category and say use this. Instead, remember this. Identify the transaction for what it actually is. If it's personal, don't disguise it as a business expense. And if someone handles your accounting, tell them what the transaction actually was. Now, let's reverse that situation. Suppose Jane purchases office supply for the agency, but she accidentally uses her personal credit card. Did using her personal card automatically make those office supplies a personal expense? No, they're still connected to the business. But now the transaction needs to be properly documented and handled based on the business structure. If Jane operates through an S corporation, for example, the corporation may reimburse her for qualifying business expenses. This is where you may hear about something called an accountable plan. We're not going deeply into accountable plans in this video. We'll cover that separately. For now, remember the distinction. Business money paying a personal expense doesn't make the expense business. And personal money paying a legitimate business expense doesn't necessarily make it personal. The underlying expense matters. So if that's true, why am I telling you to keep everything separate? Because mixing personal and business transactions makes your accounting harder and it creates more opportunities for mistakes. Imagine Jane's agency credit card has business software, subscriptions, office supplies, business travel, and other business expenses. But mixed throughout are her personal electric bill, family purchases, and other personal expenses. Now, someone has to sort through everything and determine personal, business, and here's where it can become a tax problem. If a personal transaction is accidentally categorized as a business expense, it can eventually make its way onto the tax return as a deduction. That's where an accounting problem can become a tax problem. Keeping separate accounts gives you a much cleaner record trail. Business income comes into the business. Business expenses come out of the business. Personal spending stays personal. It's simpler. And don't forget your documentation. Even when an expense legitimately belongs to the business, you still want records supporting it. Think about two questions. What did you buy and what can you show that you paid for it? A receipt or invoice can help you show what you purchased. A credit card or bank record can help show that you actually paid. And depending on the expense, you may need additional documentation showing the business purpose. That's why I don't want you relying entirely on your bank feed. Seeing a $300 charge tells us money was spent. It doesn't necessarily tell us what was purchased or why it belongs to the business. That's what your supporting records help establish. So here's the simple system I recommend. Have a dedicated business checking account. Use a dedicated business credit card. Have business income deposited into the business account. Pay business expenses from your business accounts. Keep personal spending in your personal accounts. And if you accidentally mix them, identify it. Record it correctly. Don't look for a business category simply because the transaction came through the business account, because the account doesn't determine whether an expense is deductible. The expense itself does. So the next time you're about to use your home care agency's credit card, ask yourself, does this expense actually belong to my business? That one question can help keep your accounting cleaner and help prevent personal expenses from accidentally ending up on your business tax return. If you're a home care agency owner and you need help with your business taxes or accounting, you'll find my information in the description below. Make sure you subscribe because we are continuing this series with more tax and IRS issues home care agency owners need to understand. I'll see you in the next video.